Somebody told me a long time ago, a dream is a bargain, no matter what the cost, if you can implement it. So take action, educate yourself, know the risk, and be persistent. Seldom does it happen overnight. So find people that are successful in that space and model them. Don't learn the tricks of the trade, learn the trade.
Welcome, everyone, to the Road Less Traveled Show. This is a show about people that were successful in a previous career and left that career to go down a different path. I'm your co-host, Richard Coyne.
And I'm your co-host, Bill Zahller.
On today's show, we have Randy Landenderfer. Randy, thank you so much for being on. We appreciate you taking time today.
Richard, it's my pleasure. I look forward to speaking with your audience and hopefully giving them some value.
Yes, absolutely, Randy. Thanks for being on the Road Less Traveled Show. Well, to start off with, can you tell us a little bit about your background, what career you started down initially?
Yeah, so I actually am in the process of. I'm still a W-2 employee, so I'm in the fourth quarter of that. I'll say there's much more behind me than there is in front of me, and I am still in that prior step, as you would say, but have a shorter window than most. In fourth quarter, as my father used to say, I'm in the fourth quarter of my career. And in the last several years, though, I have been transitioning to multifamily syndication as part-time and I should say 2 full-time jobs rather than 1 part-time job. It's 2 full-time jobs. Yeah. But I enjoyed it immensely. And so that's where I'm at today.
Excellent. And how long ago did you say you started that path?
I started in the multifamily. I started in the work world a long time ago. I started in the multifamily world 2014. I had been a hard money lender with a brother-in-law of mine flipping houses in South Florida when I still lived in the Cleveland, Ohio market, and came to Houston, Texas in 2013. And that's really where I learned multifamily, one of the large educational groups, and fell in love with it and the fact of what you can do with syndication, other people's money, and the healthy returns that you get. I haven't found an asset class I like better. And I'm a finance guy at that. I haven't found an asset class I like better. Stocks, bonds, dividend paying stocks, maybe. But still, given what we've experienced in the last, month in the stock market, I'm still very bullish on syndicate, multifamily commercial real estate.
Right. Absolutely.
Yeah, it's incredible. I mean, who else is going to lend you, 70 to 80% of the money to buy a property? The bank that your stockbroker is not going to lend you that money, not to mention the possible tax advantages and the fact that it's a physical real asset, especially important in the times of inflation that we're seeing now. So yeah, it is a great asset class.
Non-recourse debt, you got to throw in there too, right?
Right.
Absolutely. That's super important. And again, quite honestly, just some of the stuff I've read recently, just comparing different just real estate classes. Multifamily is the top. Even better than, certainly better than triple nets, certainly better than retail, office. Some of the other ones are close seconds, like I think industrial and self-storage are way up there as well. But number one is multifamily.
Well, the space has gotten very crowded, as you gentlemen know, in the last 3 to 5 years. I mean, everybody is pumping out students, and it's kind of like flipping houses on the HD TV commercials. There's just a lot of new entrants into the space.
Yeah,
which is good, but they'll get weeded out too. So,
yeah.
Well, Randy, what areas do you focus on geographically for the multifamily year?
So I currently reside in Houston, Texas, as I mentioned, and as I'm winding down my career, we've been focusing a lot on Houston and San Antonio are the current points of emphasis, where we do a lot of underwriting, but I've also been spending a lot of time on co-GPing and joint venturing with other syndicators, building relationships. And I've invested passively as well. I continue to invest passively in multifamily. And so I've invested in it's a couple different, Oklahoma, Florida, Ohio as a passive investor. And when I do get to that next season of my life full-time, I really hope to broaden that, because there's just a lot of great markets today, all through the South, basically Southeast and Southwest are just hot.
Yeah. The Sun Belt, that's where people want to live. That's exactly right. Yeah.
Net population growth, right? Already moving the colder, more restrictive climates, and
I recently put a post on LinkedIn about a Fortune 500 article that's shown where people are moving to, and 4 of the top 10 cities, as you might guess, are in Texas: Houston, Dallas, San Antonio, Austin. And there was Chicago was on the list, the only one really from the Midwest. And it was interesting. I got responses from people in the post that says Chicago, and I live in Chicago. Really, Chicago? It's kind of a lot of outflow. So,
right.
Yeah, that surprised me too.
Yeah.
Chicago. I have a brother who is a huge Chicago Bears fan, and chose to live in Indiana, but as close to Chicago as he could be. But he did not want to live in Chicago. So,
a wise man.
yeah, good. So, Randy, as you look back, and again, your current job is corporate, something in the corporate world, I guess, right?
Yeah, I'm currently employed for a large academic medical institution here in Houston, Texas. So my education is really accounting, finance, IT background, and MBA, CPA, blah, blah, blah. And I currently reside, as I said, as a chief compliance privacy officer for IT security and audit services for a large academic medical center here in Houston, Texas.
Okay, gotcha. Yeah, actually, I retired 2 years ago from my W-2, and I was in the IT world. I wasn't very technical. I was really more the very beginning, did some technical work. Then I gravitated more toward the leadership and project management, the program director type role in the field, and then I moved over to the sales side and ran the P&L and the regional areas. And actually, I covered Texas at one point. Yeah, actually. So I've actually seen snow in Houston from when I was there, and that is pretty rare, as you I'm sure know. But anyway,
when was that? 2017?
Oh geez, no, it was before that. It was before that point. So yeah, I can't remember exactly when.
I've only been here since 13. I said I've seen it once, but it's a miserable experience when it does happen.
Yeah, exactly. So Randy, as you look back in your corporate world, is there a humor story or maybe a life lesson you can share, something that you would like to share with the listeners?
Well, that's a great question, Richard. Humor is probably not one of my talents, but I think a life lesson or attribute is, I would say that I've always been what I would say an overachiever. At least I've tried to be. I think back to my early days when I was in athletics. They told me I wasn't good enough to get a college scholarship. I played football, and if you saw me, I'm about 6'3" and weigh 190 pounds today. And so I didn't weigh a lot less than that when I was a younger man in high school. And so that's, by today's standards, not college material at all. Right. But I was able to persevere, and I actually did get a college scholarship. I remember when I was graduating from college, they told me I didn't have good enough grades to get the job I wanted, and I did get that job. And I remember going to the next season of life when I was trying to get my MBA, and they again told me my grades weren't good enough, and I was persevered and was able to get into grad school, and I actually was able to just bulldog my way through it. So that, and then just numerous corporate opportunities where I'm an accounting finance guy, and I serve as a chief compliance officer today. Go figure. How did that happen? But these career moves take place, and you don't ever think. I would never have been able to plan to get to where I'm at today from then, but it's been a very lovely career, and one that I've enjoyed, and one that has been beneficial. And so I'm very thankful. But I think the key takeaway there, the life lesson, is really just persistence, really. And that transitions to whatever you want to do in the next season. And for me, that happens to be syndication and multifamily.
Mm-hmm.
It transfers to a lot of things in life, right? Persistence. It's the old, I tell people, it's the hare and the tortoise, right? Slow and steady wins the race. Some people get there quickly, but that hasn't been what I've found to be successful.
I always knew, like, the persistence and also like focus, I think, goes hand in hand with that. As we saw, a lot of times you see people new to real estate, and they go to the local RIA meetings and they're excited about multifamily. And then the next month somebody comes in and they talk about notes and then flipping. And then, so I think it's a good idea to get a broad idea of what's out there, but then, like you said, focus on something and go deep on that one subject and become an expert of that and tenacious at your goals.
Yeah, I'm today I serve as a coach for Rod Khleif's organization.
Oh, yeah.
To your really point, Bill, you see people coming into this space and they just want to get rich quick.
Yeah.
And though it can happen, it's not necessarily the most likely path. It's persistence that does it. But yeah, I keep encouraging people to develop their investment strategy, because you're right. I call it the shiny object syndrome, right? We get attracted to 20% IRR, and it's in Bitcoin or gold or I've seen those investments, and I just haven't taken the time to try and understand them. I'm trying to specialize in one and get very good at one niche space.
Yeah.
Right.
Yeah. Are you going to go an inch deep and a mile wide, or are you going to go deep in one and then master that and then maybe go to another class or another something? Yeah.
But yeah, as you mentioned, we always say, again, there's the building over time as you're building up your business plan, your relation. It's a relationship business, not a real estate business we're in at the end of the day, right? It's all who, brokers, investors, banker. I mean, everybody, that bring your team, and over time, you continue to build that out with quality people, and it becomes a successful business. But like you said, it takes time. It's not an overnight success or one quick weekend workshop and you're there. And
I talk to a lot of people like you guys do, I'm sure too, and you try to encourage them to take a continued path and to set their sights on something. People say, I want to quit my day job. That seems to be a focus of a lot of people. Want to quit my day job and do syndication or something else. And I say, you really need to have a path where you've replaced your income. At least I encourage them, or a large portion of it, so that you can weather the turns. And so the point of it is I started out as a passive investor in this space and networking with a lot of seasoned syndicators or sponsors, and buying a lot of coffee and picking their brains and asking questions and just spending time at it to educate yourself and to hone your game, as you said. This isn't this particular space for me isn't rocket science stuff. It's a tried and true approach, so it is attainable, but you have to have you have to have a plan.
Right. Absolutely. Well, speaking of the plan side of it, Randy, what was one of the exciting factors that made you decide to get into multifamily? You got into limited partnership, I guess, and you saw the returns, you got a little more educated on it. Was there a deciding factor just kind of over time you developed into something you really became interested in?
Well, the aha moment for me came in about 2014 when I was first getting started. So I had looked at trying to acquire several smaller businesses to own and operate a decade plus ago. And I just found the barriers to entry were very big because I didn't have large sums of capital. And also the really factor that deterred me from that in the end was the fact that I'd have to sign a recourse note with a bank and take out a substantial loan to do that. And not that I was wealthy, but I really didn't want to put my family's earnings I still had young children at the time, or high school seniors and stuff, and I didn't want to put that in jeopardy. So when I learned that I can buy a multi-million-dollar asset, hard asset, as we said, with a non-recourse loan that I can't be held personally liable unless I commit fraud, that was an aha moment for me. And then when you realize that capital is available out there and I can raise it with other people, that was the aha moment for me. Like, wow, why don't more people do this? Either invest or do it more. I mean, it's just
right.
So it's the non-recourse and the capital, the availability of the capital via syndication.
Oh, excellent. Yeah.
Yeah, it's amazing. And again, so many people are brainwashed to think that the only place you can invest is through your 401k and into the stock market. And that's because you get three choices of mutual fund A, B, or C, and that is not the limitation we really need to deal with. I mean, there's ways to buy real estate, even if you're buying something small, and then obviously if you want to get into a syndication and be part of a large apartment complex, again, great way to go. So Randy, as you are making that shift from corporate to your future of full-time syndication, maybe as you started in the syndication side, was there an obstacle or something you encountered along the way you had to overcome?
Oh, there's tons of obstacles, as you all know. One, it's building your network, building your team, right? So you start out long on ambition and short on talent and or funds. and I was classic that way. So again, it's education, and building the team was the first one. So learning, going back to the very beginning, learning to underwrite assets is a skill, and is very analytical. And some people don't enjoy that and consider it very painful. I'm a nerd, and I happen to enjoy that exercise, at least the start of it. And so it's getting your head around that, and then getting your head around, where am I going to find investors, right? So I got to find opportunities, I got to find investors, and I got to have a team. Well, none of those, again, are able to be done over a week, a month, or probably even a year, but over a couple year period. There are a lot of national education groups out there, I should say, and you can readily plug into those to build that team rather quickly. You can find investment opportunities that you may invest in as a passive investor, and you can start to mingle and potentially find partners. So that's the simplicity of it. But my early challenges were simply time, money, and primarily time to evaluate assets, make broker calls, travel and visit the properties, partner with people, find your legal advisor, who's going to get you a term sheet, who's going to help you on the debt. So, but that's the value of joint venturing to me today.
Right.
Absolutely. Yeah. Well, Randy, as you look back and when you got into the syndication side of it, is there something that you can think to was like your first victory that it kind of made you think, well, I'm definitely on the right path now? And
my first, I'll say, victory was my first passive investment. I had built a relationship with a gentleman that I respected and really liked here in Houston, and he bought a property in Port Arthur, Texas. And for you gentlemen who may not know, Port Arthur, Texas is due east of Houston. It sits right on the Gulf, and it was a 224 unit property that had been abandoned, and the developer had rehabbed it and was selling it, and it was about 65-70% occupied. So the play was really just to lease it up, refinance it, and sell it. Refinance it, and hold it for another couple of years, let the prepayment run down, and sell it. So we did that, and I invested like 9 months, maybe a year into the property. He did reinvest it, and I got 60% of my money back. So I'm puffing my chest, thinking I'm a pretty smart guy. But then all hell broke loose, and we had a lot of problems with that property. It's kind of a story in and of itself of what can go wrong on these things. We had a fraud, we had a flood, and we had a fire. And so over the ensuing 6 years that I was in it. So that one turned out to be the worst investment that I've ever made. I got all my capital back, but I didn't make any money. So zero return, 6 years. So for your listening audience, this is not the typical process. That is the worst case. The best case is a 4.5x equity multiplier in 2 years. And I would say, and having been in over 4,000 doors, I've tracked it, and I've got over a 2.5 equity multiplier over those 20 some different assets I've been in over 6 years. So
fantastic.
That's the encouragement to your listening audience. I gave you the worst case, but I'll give you the best case as well.
Yeah, that's great.
oh, yeah.
So Randy, maybe that was it. You kind of shared a life lesson, just that obviously, with that recent, situation, your first one. But can you sum anything else up in terms of like a lesson that you would share with others?
I think the lesson I would encourage your audience, it's not just real estate, whatever your next season of life is or your next venture. I would really encourage you really just to educate yourself, know the risk. Go into it with your eyes wide open, whether you want to sell real estate or maybe you want to change careers. I don't know, be a golfer or whatever you want to be. I mean, just educate yourself to understand the risk or what it's going to take, because everything takes, at a minimum, it takes personal time away from you and your family. And so you have to at least weigh that. And then and then I would go back to education and persistence. Set goals. I mean, I'm sure you gentlemen do. I do. I try to set annual goals and try to keep myself accountable to them. So I think the summary would be is really education, knowing the risk inside and out, and persistence, as we talked about earlier, to stay in the game. It can be lonely at times when you're starting a new career or a new activity season, whatever you want to call it, but stay the course. And the only thing I'd say is, no matter how old you are, is keep going, because no matter how old you are, whether you're 20 or 70, you got to keep learning and keep exerting yourself. So.
Absolutely. Yeah. I think it's great advice to always be learning. We've always been a big fan of education too. Not to go and turn pro golf. I always get stuck at the windmill part, so I can't get past that. But well, Randy, where are you today on your journey? You said you're building out, you're transitioning from the W-2 over to the syndication. Where, how, as you're building out your team and scaling that way, where are you today, and where do you see yourself going as far as your goals you mentioned?
Thanks. The goals are really, so in the last, we acquired with a group of people, we acquired a newer asset, a 396 unit in Weatherford, Texas. Back in November, we acquired a 60 unit Class A here in Houston in February. And so we're starting to gain some momentum, and we're just currently with partners evaluating a lot of different properties. A lot of people are shy this time of the season in the market, the cycle in the market, when interest rates are rising. And I think I would subscribe to, when's the best time to buy? 20 years ago or today? So you just buy very differently today than you did even a year ago, and get much more conservative. But there's still opportunities out there, and that's where broadening horizon to other markets besides Houston and San Antonio, tertiary markets are becoming more attractive to me personally. Right. And so that's where I hope to focus my efforts in the coming 12 to 18 months, just to continue to branch out and find joint venture partners and seeking other markets and working it.
Yeah, makes sense. Again, obviously, I get people are concerned about inflation and rates rising and all that, but the way Bill and I like to characterize the opportunity is that, look, we just survived the biggest black swan event anybody could have ever in their wildest dreams imagined, and we're still here. Income's still going up. Rental rates are still going up. The opportunities are there. You're right. You have to buy differently today than you did a while back, and you have to be very careful. And, there's always a risk, but at the same point in time, it's a calculated risk. And there are things you can do to mitigate that risk and to manage that risk. And, again, are you going to sit there and let your cash erode in terms of its value by not putting it to work? Or are you going to put it to work in a physical assets that will appreciate with inflation? Yes, the rental contract we just signed last month, I can't increase that rental rate for 11 months, but guess what? I'm going to release another one next week. And that one, I just moved the market rent up because the market's up. So, yeah. So Randy, as you look at, your new path and all that, is there anything you can share that you do as a way to try to give back? Try to do something for perhaps your residents, the community, something?
Yeah, that's a great question. So I mentioned a couple different aspects. One is I really think personally that we all need to think more about that. The get rich quick scheme can happen, especially over a length of time. But I think we need to, as Americans, think about that giving back. And so personally, I try to give back in my time. As I said, coaching with Rod Khalif, I make a few dollars, but I certainly don't make money at it per se. And then the other one is I've kind of committed, my wife and I have committed to, allocate a certain amount of our assets to charitable organizations. And so we try to give to a variety of different charitable organizations. And I think I really like, if you guys have heard of the Gates Pledge, the Bill Gates Pledge, where he talks to some very wealthy people across America and encourages them to give away 50% of their net worth. So I'm sure that there are people with a lot more money than I, but no matter whether you got $100 or 20 million bucks, I think we ought to consider giving that away to charitable organizations. My children don't need all the funds. I certainly didn't get much, so I would believe I like the Gates pledge. I'll just put it that way.
Yeah.
That to give it away, much of it, and leave some for your heirs as well. But at the end of the day, that's how I want to give back.
Yeah.
Excellent.
Great. That's great.
Yeah. Well, Randy, is there something you've recently implemented in your business that's helped you scale and achieve your goals?
I think the scaling has come for me is just identifying joint venture partners. So I started down this track trying to do it myself and spending countless hours underwriting and talking to, lenders, et cetera, et cetera. So the scaling has come for me by finding joint venture partners, because as prices rise, I simply can't do it myself anymore. I can't raise that much money, and you got to find people. And the beautiful part of that is, as you gentlemen probably know, is I don't have to do everything now. There's underwriting, there's investment relations, there's asset management, and there's many different pieces to this. And that's the beauty of a team, is you can delegate responsibilities. And so that's kind of what I'm trying to focus on.
Absolutely. Yeah. I mean, it's definitely a force multiplier there with your time. You only have so much, and you can't focus on everything. It's definitely a team sport with multifamily.
Yeah, it really is. And it's just a simple math for me. It's the capital raises are getting so much bigger today that
it's true.
I personally don't have the ability to raise $10 million.
Yeah.
But
absolutely.
Cumulatively with partners, I can.
Good. Randy, you've shared a few nuggets along the way in our conversation, but can you sum up just kind of the advice you might give somebody who's considering making a path change?
Yep. Do it. First of all, take action. Take action. Whatever your passion is, pursue your passions. Somebody told me a long time ago, a dream is a bargain, no matter what the cost, if you can implement it. So take action, educate yourself, know the risk, and be persistent. You just got to dog it.
That's right.
It's just seldom does it happen overnight. So find people that, whatever it is you want to do in that season, find people that are doing it, model them. Again, whatever it is, find people that are successful in that space and model them, and learn. I had an old mentor tell me, don't learn the tricks of the trade, learn the trade.
There's an expression I love to along that line, and that is that, people say learn from your mistakes. Well, I'd rather learn from the mistakes of others and apply that.
Excellent advice.
Yeah.
That's excellent advice.
Yeah.
And that's why education is so important, because you're going to learn from others, and you're going to learn the pain points and how to mitigate those risks.
Absolutely. Yeah. Good. Well, Randy, what's the best way for our listeners to be able to reach you and learn more about what you're doing?
Well, Bill and Richard, I really appreciated this morning to get to know you guys, and also to talk to your listeners. But the easiest way to get me is on my webpage. It's invest-ark, A-R-K, that's A-R-K, invest-ark.com. And there's a contact me on there, contact us, I should say, on there, and be happy to spend time with any of your listening audience. I can talk real estate all day and night. So,
well, excellent. We'll include links in the show notes below, so make it easier for them to reach out to you, Randy. Well, we really appreciate you being on the Road Less Traveled show, and we enjoyed the conversation and wish you continued success.
Bill, I really appreciate that. You guys as well. All the best to you.
Thank you so much, Randy. We appreciate you being on. We really want to thank our listeners for tuning in. Please continue to give us a great 5-star rating so we can bring you more great content like Randy Langenderfer today. Again, we're glad you were with us. And please, folks, we also want to thank Park Capital Partners that sponsors the show. We want to remind everybody that we have a 506c value add fund that is open now for investment. We have a property under contract. And finally, as well, we also have the Park Capital Partners Foundation that is a nonprofit, and we make a donation to honor our investors when they join us in a property to honor them. So please certainly reach out, stay in touch. And, Bill and I are always available to take calls and questions. And we want to thank everybody for joining today. And remember, folks, the road less traveled may be calling you. we recommend that you listen and take action. Thanks for joining.